You are watching Market Watch, the brief overview of the key events from the world of finance. Today we will start with the cryptocurrency market, which failed to complete the previous trading day in the green zone, despite the next increase in US stock indices. The decline in quotations of the largest cryptocurrency occurred against the background of profit-taking on previously opened long positions. This is also indicated by the outflow of funds from Bitcoin ETFs, which has become the largest since the creation of these investment funds in January this year. And although there is still a risk of further decline in the value of Bitcoin, the trend remains bullish, as there have been no global changes. Moreover, key stock indexes continued to update historical highs. The S&P 500 index broke the $5,300 mark, even though the yield on U.S. government bonds remained unchanged on Thursday. Nevertheless, the US dollar has significantly strengthened against most currencies, including the Japanese yen. But still, the risk of a collapse in the quotations of this currency pair should not be excluded, because earlier the Bank of Japan, together with the Ministry of Finance, restrained the devaluation of the national currency. The financial regulator entered the market with interventions at the moment when the pair's quotes were approaching the 150 yen per dollar mark. Since the pair's quotes have again approached the 152 yen per dollar mark, there is a risk of another intervention by the Bank of Japan. In this case, there will be a sell-off of this currency pair, which may increase when additional information becomes available about the Fed's willingness to lower the key interest rate. Let's also pay attention to the short-term, but strong growth in precious metal quotations. Gold managed to overcome the $2,222 mark, but there was no fixing of quotations above the technical resistance level of $2,190 per ounce. The still high interest in the protective asset indicates investors' concerns. And this is quite logical, because the main goal for the Federal Reserve is to reduce inflation, which in turn is possible only if the US economy slows down. The regulator constantly talks about a soft landing, but it is impossible to guarantee this scenario. At any moment, another high-profile bankruptcy may occur, capable of crashing the stock market. And at the end of today's review, let's talk about oil. Quotations of the American benchmark WTI grade are approaching the $80 per barrel mark, reacting to two key factors. First, the demand for gasoline in the United States is declining, as indicated by data on its supply. Secondly, the United States has drafted a UN resolution calling for a ceasefire in the Gaza Strip. But the situation in the region remains extremely difficult, so it is difficult to count on a steady decline in oil prices in the medium term. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.